So our next panel discussion will be featuring quite a few crypto celebrities, and they will be discussing corporations tackling blockchain. Leading the panel is Andrew Fai, founder and CEO of Obito and co-chair of Asia Blockchain Alliance. So please put your hands together and give a warm welcome to the man with a crypto bun, Andrew Fai, and our panel of experts. Round of applause for Andrew and the experts, please.
All right. Okay. Thank you, BlockShow, for the invitation today. Okay, so with the rise of blockchain, corporations have been leapfrogging into blockchain solutions today. And according to the new IDC spending guide, forecasts indicate that worldwide spending of blockchain to reach 12 billion by the year 2022, which brings forward to the panel discussion today, corporations tackling blockchain. So may I ask our panelists to give a brief introduction of themselves and share their most recent endeavor or project relating to the subject, corporations tackling blockchain. We'll start with Emma.
Thanks, Andrew. Thanks for having me. So my name is Emma. I'm running a blockchain incubator in Singapore. The name is LongHash. So we have offices in about 6 locations around the world in Asia, Europe, and the US. Our primary mission is to incubate top-notch blockchain startups and pour in resources to increase their odds of success. So I think your second question is to talk about
the most recent project involving corporate blockchain. Yes.
Right. So I think a large part of what we do, in addition to incubating startups, is also to educate and promote the understanding of blockchain technology. So with regards to corporates, I think we are starting to do more and more educational seminars. As a matter of fact, because of my background, I was before I joined the crypto dark world, I was with McKinsey. Before that, I spent a couple of years in financial industries. So we actually went back to McKinsey to educate, the ex-colleagues about, what do we know, what are we learning about blockchain technology, and trying to do this type of educational seminars, try to, promote the overall understanding of it.
Excellent. Guys, super excited to be here. For those who don't know me, my name is HENRI ARSLANIAN, and really my passion and focus is the future of financial industry. And I tell people I'm just very lucky I get paid by PwC to do this as a living, where I lead our FinTech and crypto practice here in Asia and many of our initiatives globally. On my spare time as well, I'm a professor at the university where I teach FinTech, and I'm also the chairman of the FinTech Association in Hong Kong. I'm a lawyer and a banker by background as well. One thing on crypto and blockchain that we're involved in, one thing people often don't know is PwC, crypto is a global priority for us. Our mission is to build trust in society and solve important problems. And God knows there's a lot of need for that in the crypto space. And to show how serious we are, our team in Hong Kong, PwC Hong Kong, last November, we accepted our first Bitcoin payment for our fees. And just to put things in perspective, only in Hong Kong, my direct team, we have 40 people, 40, full-time on crypto. And we advise a number of crypto exchanges, ICOs, crypto funds, a lot of governments, regulators, and many other players in the industry. So very excited to be here and very excited to share with you all this afternoon. Thank you.
Great. Thank you. This is Mark Smedley with Oracle. I run a global team of cloud practitioners around digital innovation, FinTech scale-up, and open banking. I've been around banking most of my career. I'm running the team out of Singapore at the moment, doing some hiring in Singapore, working very closely with the SFA, with the Hong Kong FinTech Association as well. And from a blockchain perspective, Oracle took a slightly different view of crypto. So we're not really in the crypto space. We're more in the Hyperledger Fabric space, doing sort of smart contract-based corporate-to-corporate work. Oracle announced a month ago that we now have an application environment for blockchain that now automates more of the supply chain, trade finance, those kinds of use cases, which would make sense. And then for me personally, my most recent project was forging an alliance with the R3 Corda organization. I'm keenly interested in Corda because of the consortia, the ecosystem that they represent. So we're in the process of working through how do we work together between their ecosystem and ours. Yeah.
Hey guys, this is JAFAR. I am an audit senior at EY, Ernst & Young, and I've been involved in the crypto space since 2013. I got interested in blockchain in 2016, and since then I've been learning about all the wonderful things EY is doing with blockchain. So I'll keep it short.
Okay, great. So, so we're going to keep one stone from Harris back to Emma on the side. So what are some existing fallacies and issues surrounding blockchain in the corporate sector you observed?
I'll let Mark take the first one.
So you said fallacies.
Fallacies, yeah, some myths. You know.
Well, I mean, number one, in my opinion, this is just me speaking, right? Not necessarily representing Oracle, but my perspective is blockchain was way overhyped, right, from a corporate perspective. It was going to wipe out the middleman. It was going to transform business models. It was going to revolution everything from banking to accounting to you name it, right? And what I've observed is that AI has had a much faster adoption rate than blockchain in my industry, right? So that's sort of one of the fallacies. I think the other one is that when you look at what it really takes to build a permitted blockchain network, there's more work there than was ever discussed, right? Because to forge consensus agreement, to create a smart contract among 2 parties, let alone 100 parties, is quite difficult. Maybe not difficult, time-consuming.
Gotcha. Henry?
Yeah, sure. So when it comes to banks, frankly, I think, again, I agree it was a bit overhyped, but frankly, I think anybody believes that the banks will move their back end to blockchain in the next couple of years, and I think it's very naive. The existing system right now, obviously, is not perfect, but it still works. Unfortunately, I think imagine banks have still have now moved to cloud. So before we move to blockchain, I think we still have a way to go. I think in certain use cases, right? For example, provenance, traceability, trade finance, what we've seen recently with the Hong Kong exchange, there's really some good use cases where we can see the uptake for it. But on a more broadly perspective, I'm not too optimistic on the short term. However, on that, what I would say is where we're seeing a little more interest, where I'm more bullish, is on the new entities. Like, for example, virtual banks, digital-only banks, where there's no spaghetti, there's no the back end, there's no the legacy infrastructure. That's an area I'm very bullish on. But also, second is crypto. I personally believe we're going to see financial institutions adopt crypto earlier than like moving their entire back end to blockchain, for example. And I think there's a lot of the developments we've seen in a couple months. For example, regulatory clarity. You know, that ticks one of the boxes as well. I was just here earlier this morning, and some people were talking about regulators and financial services regulators and saying, regulators are not very familiar with crypto. Let me tell you, that's a very naive perspective. I can tell you I'm very privileged in my job. I deal with many regulators around the world. And I can tell you the average regulator that I deal with is way more knowledgeable than the average financial services professional. And I think that's the one misconception we have a lot of community in many countries around the world. Look at Thailand around here, look at Hong Kong since November 1st, look at what's happening in France, other places around the world where we have regulatory clarity. I think those issues now are being solved. I think that's generally very positive for the ecosystem, and I expect more institutional investors to get into the space. And frankly, I wouldn't be surprised in over the next really 2-3 years, every large financial institution has some kind of crypto offering that is available to customers, their institutional clients.
Can I just comment quickly on that? I agree with everything you said. And case in point, in the States, the US Fed, right, has a crypto division working very closely with MIT and a bunch of accelerators out of Boston. So I think they are ready to talk about crypto. I don't think the market has moved in that direction from a banking perspective just yet. But I do know of folks working on crypto fiat currency, right? Is that going to be a real thing or not? Interesting question. But I agree with you completely. I think the regulators are way ahead of the game here, generally speaking, yeah?
Emma?
I think those are definitely valid points, and I agree. I think what Henry mentioned. Just to add on, I think firstly, the biggest fallacy is the mismatch between the expectation and reality, right? So with any new technology, it's bound to go through a couple of cycles of boom and bust, right? Which you will find the technology itself will start to mature, the adoption itself will start to pick up. But I think what we've seen in the last 12 months is people have sky-high, expectations for this technology. And once they test it out, they're like, this is not nearly as efficient as the technologies we have today, hence it's crap, we shouldn't be looking at it. So I think it's about managing the expectations, seeing the long-term potential this technology could come in and being able to envision that kind of blockchain-powered society or, basically rewiring the technological stack, the economic relationships and all that, but also having the patience to sit through and testing that out. So of course, from here to that vision, we have to sort out a lot of issues, right? For one is the regulations you guys were talking about. For two, it's the governance, the industry standards, right? What about tax treatment? What about, because a lot of those blockchain solutions requires multiple industry parties, right? If we talk about trade finance, you have importers, exporters, you have financiers, you have logistic companies, you have customs. So all of those industry players has to get on the same platform, right? So that requires different parties to come together and work on a solution. And now, blockchain solution will only give you maximum benefits if you have a lot of nodes, will give you network effect. So of course, when you have a proof of concept, you probably don't have the expected savings or efficiencies as you expected. But you can see that it's a working solution, and all it takes is to have the patience, to have more people to test it out and join this network. So I think I'm definitely optimistic, and I definitely agree with what other panelists are saying. But we just kind of have to trudge on. Yeah.
Harris?
I will miss this one.
You missed this one.
Okay,
Okay, but you're going to take the next one, okay?
I think they covered about everything.
Okay, you're going to take this one, though. So what are some practical challenges you have noticed with financial institutions adopting crypto or blockchain?
All right, I'm sorry if I'll be repeating some of the things they said. I think, we need to understand that a lot of financial institutions, are bounded by these regulations that they created 5 decades ago to make sure they keep the competition out. And I think it's going to take some time to come into crypto. For blockchains and banks to be specific, I think banks will not adopt blockchain. That's what I think personally, and that's because they can have databases that could be much faster and would be more cost efficient for them. Other than that, I think for financial institutions, they need to think about blockchain. They need to take a blockchain and they need to not see how it's going to fit in their business, but they need to look at blockchains in a way of how their overall business is going to change with blockchains. So how would their how would their business look like in a blockchain-enabled world? So we look at blockchain as not a solution in itself, but as an enabler. So what would it mean for a business when value can move as fast as data?
Valid points.
Bart? Can I comment?
Go ahead, please. Yeah.
I'm not.
You're not.
Sure.
We need you now.
Okay. So I agree with what you said. I look at this from a slightly more macro perspective, however, because the incumbent banks have their own challenges. They have decades and decades of investment in their data centers. They have vested interest in existing process. They're very slow to adopt new digital processes. However, 5 years ago, the FinTech said they're going to be category killers. They're going to create the new generation of banking. Then they said, gee, maybe we should collaborate with the banks. And in the process, what's happened is the big 4 Chinese platforms and the big 4 American platforms have gotten in the game as well, right? So case in point, I think the best example is this little thing called Alipay was left behind as a private entity when Jack Ma took Alibaba public. It's now known as Ant Financial. And if you're not aware of this, they're running incredibly fast clock speeds on their own blockchain. And they are now the 10th largest bank in the world by market cap, bigger than Goldman and Barclays combined. Through the last round, I think it was $12 billion they raised in fresh capital a couple months ago. So what I try to tell the banks when I'm being in my provocative mode is if you're not paying attention to this, you probably should. Because in the future, there may be a completely different paradigm in terms of what actual foundation supports the function of banking, not so much the industry of banking, yeah?
Henry?
Maybe on a more macro perspective, guys, I think we have to understand, as for those of you who have been coming to crypto conferences, the world has changed a lot. You can see it even this year, right? This industry is becoming more institutionalized. Frankly, with the regulatory clarity that's coming up, I'm very excited. Some of the custody solutions are coming up. It's very exciting as well. My biggest concern right now, it's us as a community. For example, one thing I often say, if as an institutional investor, one of the things we need is actually the industry to be mature. I think some of the incidents we had the last couple of weeks show that maybe we're not as mature as an ecosystem yet or where we could be, right? I mean, I was actually, the day of the fork, I was with a crypto investor in London, and he was literally showing me the newspaper saying, how can we actually put institutional capital in the industry where one of the top 5 coins, I mean, they're literally sending each other Twitter insults, right? It doesn't really show the maturity that we have and actually make full use of the ecosystem. The second thing is all of us. Right, if I look across our client base in crypto, the biggest difficulty we have right now, is opening a bank account. And this is why for many of us, I mean, I was meeting so many of you today in the room that work for financial institutions. They work for Big Four. And each one of us, if you don't believe in this space, great, we'll see you on the other side. But if you believe in this space, we each have a purpose and a role in our different respective organizations. It's amazing, I see banks on one side that talk about their crypto projects, on the other hand, they're closing bank accounts of startups or crypto startups. And each one of us, I think we have a role in the ecosystem. And also best practices. You know, in my capacity of chairman of the FinTech Association, we just released 2 weeks ago another best practice document for ICOs, where we all, firms like ours, others, we contribute our IP, we make it out to the public for whoever wants to do a best-in-class token sale. And this information is publicly available. And despite that, I still see projects out there, they're not doing KYC, there's zero governance. Frankly, the transparency is not there. And unless, as a community, we put in place some of these best practices, because we're always as strong as the weakest member of our community, that's why I think we're going to have troubles moving to the next step. And that's why I think we have all a role to play.
Wow. Emma?
So I think the question is, like, what are the challenges the financial institutions are facing right now, right, before they can adopt this blockchain technology as part of the solution? I think primarily, perhaps 4 different type of challenges. The firstly is the technology itself will have to mature. It will have to, from scalability perspective, it has to match the performance of today's financial system, right? If we're talking about transactions per second. So that's for one, and also the technologies around encrypting data, the technologies around ensuring privacies, you know, how do you do multi-party computations, those type of things needs to mature, because financial institutions are dealing with personal data and financial transaction data, which are extremely sensitive. So that's for one, technological challenges. Secondly, is perhaps regulation challenges, right? So you have, like in Europe, you have GDPR, which, you know, allows the, you know, person whose data are collected to have access to them and also have the rights to be forgotten. So if you write them on blockchain, how are they supposed to be forgotten, right? So it's things like that. And I'm sure as people are getting more and more concerned about privacy, more and more regulations around personal data is going to come out, not just in Europe, but also in Asia, in Europe, in US, right? So financial institutions need to think ahead about how do they tackle that. So that's the second thing, regulation. The third thing, again, I think it's industry standards, because we know different banks, 80% of the banks out there are probably testing out publicly or privately blockchain-powered solution. But they have different choices, right? Some of them develop their own, like JP Morgan Quorum. Some of them are working with IBM Happy Ledger. Some of them are working with R3. So everyone, I guess, is trying to get ahead of the game and building their own chains or building their own solutions. I guess it's important for some sort of industry standards to merge. Especially, it's important for the existing big players in the financial space to come out, define that standard, so that the smaller players could latch on to that standards and save cost, right? So to I guess, speed up the adoption curve. And then lastly, I think the challenge is mindset change, because a lot of the early adopters of blockchain or cryptocurrencies started with believing in decentralization, disintermediation. But if you think about it, banks started with intermediating, right? They take your money, they lend it to someone else, they started with that, and they charge a difference in interest rate. So essentially, you're asking them to disrupt their own business model. So they need to change their mindset and understand what are the new business model that's going to come out from blockchain technology, and how can they transform themselves and leverage blockchain technology and transform and get the most out of it. So I think unless they understand that part, they're just going to be using blockchain technology to do incremental efficiency gains instead of sort of fundamental transformation.
And building on top of the question, so I'd like to segue into talking about public blockchains now. So founder of Clover, Amber Baltet, has claimed that blockchain companies should not force enterprises to adopt public blockchains. Okay. Amber thinks that it may be too soon for enterprises to start doing much with open, decentralized blockchains. I would like to ask my panelists, do you agree or disagree with her, and why? Let's start with Emma.
I agree with her. I think all my previous points kind of points to that because I feel it's still a very nascent industry, financial industry. Despite some of us dislike how they're kind of being rent-seeking, a lot of behaviors like that. But they're still very important to our economy. So I think it's more prudent until all the technologies, all the infrastructures, the governance, everything tested out before they move to open decentralized public chain. But having said that, they should definitely be open-minded in terms of exploring the solutions and understand what's possible.
Harris, you want to go?
All right, so I think I would disagree with her because I think public blockchains are immutable. They're already well tested and they're already made. One of the biggest concerns for companies is hiring a third-party company or starting to develop their own blockchain. I think in EY, what EY is doing here is they are building something called zero-knowledge blocks technology, and what that does is that it uses the Ethereum blockchain and makes your transactions private. So I would disagree with her, and I think you can actually use public blockchains, and that is something that would increase the liability and resilience in blockchains. So I would disagree.
Can I follow up? What
Sure.
happened to, we all remember the DAO attack, we all know recent Bitcoin, hard fork. What if something like that happens to, say, JP Morgan? Is transactions running on such a chain? What's the mitigation?
You're trying to privatize your transactions on those blockchains. So your transaction always remains private. It's going to be built on top of that blockchain. So I think, of course, problems can still occur, but what's to say that there's going to be no problem with your own private blockchain? Somebody would like to add on that, Henry?
So the lesser of the two evil, even though we don't know which one is the more evil.
Well, not really, not really.
Right. So Mark?
So can I go back to the question of standards for a second?
Go ahead, yeah.
Okay, because in the role that I have now for the past 2.5 years or so, we've been curating and working with fintechs all over the world, right? And we did the Singapore FinTech Festival a couple weeks ago, and I had this incredible deluge of interest from a variety of folks who either participated or saw it on social or whatever. And I can't tell you how many individual fintechs working on, let's say, onboarding or identity management have just, come into my field of vision or my team's field of vision. And the question is, how many of those do we really need at an end state? And without some degree of the authorities setting some degree of standards, right, that market will never mature because you have 500 individual onboarding utilities in a blockchain. And the real value of doing it is to do it for an entire community, right, and to share that as a utility. And that idea has been around for a while, but it doesn't mature because there's no standard or no authority sort of setting the standard. So my comment would be that there are these fantastic ideas, and they can certainly be done with the technology as it exists today. The challenge is who is going to drive the standardization of that process, and then who is going to ensure risk. Does that make sense? I mean, that's sort of where I am.
Well, the internet never really became a standard until people started using it, right? There's a process of onboarding and development that needs to be kind of a grassroots movement for it to happen. All right, so Henry.
But there's a lot of initiatives going on for best practices and standards. I mean, only look at this part of the world, right? I mean, SIFMA, which is the Association of Brokers, just published 2 months ago or 3 months ago, a best practice guide for crypto exchanges. Really, it's all out there in public. What I just mentioned, ICOs. Even at PwC, we published a couple months ago our best practice guide to ICOs as well. So there's a lot of information that's available. GDF, I'm working on one of the working groups on custody, for example. So there's a lot of these organizations. There's literally one coming up every week. So I think that's one area we need because we cannot able to catch up with regulations fast enough from that perspective. And I really believe we all have a duty on this as an ecosystem. But just to bring up back on your question on public and private, frankly, it's like, I always say it's like you like wine or you like beer, right? I think we need both of them. For certain use cases, private blockchains will be the way. Think about some of banks, the way the banks are operating right now with SWIFT. I think there's certain type of activities you're going to need the private. But also in many cases, the public blockchain has a lot of benefits as well. You know, the best example I like to give when I speak to traditional bankers and they tell me, Henry, there's all crypto is being used for money laundering, you know. If we really look at, there's a lot of good use cases we can use on the AML front today, you know. Despite all the efforts, for example, we're doing at AML, around the world, according to the UN, we're able to capture less than 2% of laundered transactions. That means the entire system we have pretty much on the AML side is not working. still better than nothing, but it's not there. Whereas I think with a lot of public blockchains, a lot of traceability solutions are coming to market. I'm very excited to see actually we're hopefully going to be able to give more comfort on certain areas of this, of public blockchains and crypto, which again will contribute positively to the ecosystem on the long run.
And a follow-up question for Henry. So going forward, what role do you think cryptocurrencies will play in the corporate sector?
The corporate center.
Yeah.
Yeah, so again, like I mentioned before, I really believe this industry is becoming institutionalized, and I think that's very positive for the industry. I think people who believe we have to stay, the big financial institutions, the funds shouldn't get into that space. Frankly, I think this industry will never scale unless we have these big players coming in. Like I mentioned before, I really believe in you'll see next 3 years, big banks or all big financial institutions will have some kind of crypto strategy, services. On the custody side, I'm very excited what hopefully will come ahead, how some of the big banks are getting to the space, but also the investors, right? Having some more institutional capital in the space. And that's why I really believe we may see crypto being adopted earlier than blockchain. Because, despite all our best efforts of blockchain, in many cases, it's a cost reduction tool. It allows us to do some, a lot of operations that we're doing very manually in a more efficient way. But again, that's just a cost center in most use cases. Whereas I think with crypto, the good news for a lot of financial institutions, they see it as a P&L top-line driver. And that I think is going to encourage adoption in the space. So I'm actually very excited from the entry of institutional players in the space, especially with the rise of security tokens right now. The industry being more regulated allows a door to having some of these big players and some of the best practices coming in at the same time.
Harrison, take this.
Sure. So I'll start with how blockchain and Ethereum networks, they're trying to scale. But I think the real problem here is is to formulate what is the business value creation and the business process application. And at EY, we believe that blockchains will do for the ecosystem of companies what ERP did for the single enterprise. So anywhere where you have complex business logic or a need for shared network control, blockchain that needs to be implemented, I think blockchain is a good solution to have. So anything like supply chain management, managing partners, or rights and royalty management. And when it comes to blockchains and cryptocurrencies, I think a lot of companies think that it's about using cryptocurrency on blockchains, but it's not. You can also have US dollar token, euro tokens, or Singaporean dollar tokens for that matter. So, the future of blockchain for me or cryptocurrencies, I think even though cryptocurrencies will exist, they will continue to exist and thrive in the industry. But what I think is it's going to be about intra-company transaction based on classical fiat tokens.
Mark, would you like to build on that?
Yeah, I think it's already been said, but I think my observation is, as a long-standing financial services participant, practitioner, when the formal exchanges get into this game, I think it becomes real. So if you think about New York Stock or NASDAQ or Hong Kong or Singapore, when the exchanges get in this game formally, then I think the whole market pivots, right? So I'm seeing evidence of that beginning to happen, and that's very encouraging, I think, because until that happens, investor confidence sort of wanes, and there's a little resistance to the notion that price volatility isn't transparent. The factors driving price volatility are not transparent. So when the traditional regulators get in this game, I think we have something that really looks interesting and scalable.
Emma?
I think overall cryptocurrency will have a widespread impact on all the corporates, just because from a cross-border settlement payments perspective, right? If say, for example, Ripple's solution today, you will be able to transfer, if you're running a multinational company, right? There's a lot of costs involved in terms of managing different FX in different countries and managing all these overseas transfers. So there's a lot of cost saving coming from instantaneous settlement, and really today's the cryptocurrency over a cross-border transfer probably is 1/10 of the cost of the banking system, right? So I would like to see that become more ubiquitous for sure. But I think it will have different impact on different type of business. For the financial institution, the asset management, I think cryptocurrency will definitely emerge as a new asset class. Because we're already seeing a lot of traditional financial institutions or funds start to move into this space, even some of the more conscious or conservative funds, right? So the people are starting to look at this in a more serious light. And then if we're talking about, say, internet-based business, I think this could potentially be game-changing. Because if we think back on how e-commerce take off, right? That's where when we have like PayPal's, Alipay, those type of payment solutions starts to be able to bridge trust between the merchants and the buyers like us, right? Now you have a solution where it allows you to basically being able to track or tag, how do I put this? Being able to make payments for, say, seconds of streaming, or for, you're able to break down the whole consumption of services into very, very small units, and you are able to pay for that, settled for that using smart contract in real time. So I think that's really powerful, because before you perhaps have to pay for, say, cloud storage on subscription based, or like, say, 120 gigabytes every month or something. Now you're able to pay, I pay as I use, I pay as I watch. So now that's super powerful. I think it will create new business models, not just new pricing models. So say, for example, like basic attention token. Without cryptocurrency, how do you actually measure people's attention and actually reward people for that, right? So now that's a new business model that's coming out of cryptocurrency. So this is all super, super exciting. So I'm looking forward to see a lot more internet-based business being transformed.
Great. Okay, so we're going to wrap this up with one final question for panelists today. Hopefully, I want to be an optimistic one, which is, year 2019 ahead, what blockchain trends shall we expect from corporations? In your opinion, which blockchain use case will gain the most market traction? Harris?
Well, I think blockchain has a bright future ahead of itself. And the real hard part here is understanding where to use your resources, where to prioritize and which kind of blockchains to bring out. I think where we see a lot of traction is in the automotive industry. EY is building a platform called Tesseract, which lets companies manage fleets of vehicles. It lets you manage mobility platforms and mobility wallets on a blockchain. So many people can own a single car, and many people can own many cars. So it's about managing data and managing agreements on a blockchain. So it's going to be the automotive industry. I think blockchain is moving forward. It's going to be more about removing information silos between companies.
Mark?
So I don't see it in financial services. I see it elsewhere. Trade finance, perhaps. Shipping, for sure. Automotive, I'd say any manufacturing. The supply chain facilitated by a blockchain doesn't really create business model disruption, right? It's frictionless. So the more that can be automated there, I think will be adopted. I do think that anytime you talk about cutting out the middleman and creating a blockchain of trust, it becomes difficult for existing businesses to adapt to that, yeah? So examples like what I just mentioned, I think are likely to be adopted faster than removing a financial intermediary from a multi-party transaction.
Yeah,
Henry.
Very excited about what the year ahead. The trends that I'm following a lot is the institutionalization industry, the rise of security tokens, stable coins, and hopefully the big four finally being able to audit crypto companies. And I think the use cases that I'm following a lot is a bit what you said, is on real practical use cases. I just posted an interview that I did with the CEO of Dash, Ryan Taylor, on my LinkedIn, where basically the country where they are seeing the most adoption is Venezuela. So real use cases where we have real countries. I just came back from the Cayman Islands. There was a girl in our team, and I was like, why are we so involved in crypto? She goes, I grew up in Zimbabwe, where literally clients were paying us in fish, because that was the only currency that we've had. So I think that's one example I'm following a lot from that perspective. And second is institutional as well, harnessing talent. What I find at PwC, our Singapore team is right here, a lot of my colleagues in my team here, what I find in a lot of organizations, the most knowledgeable people on crypto are not your senior banking professionals, but your younger guys. I just got hired a guy, really, he's finished university this week. He's probably one of the most knowledgeable people we have globally. And hopefully for a lot of young people, this is going to be the opportunity to really jump a couple of levels and actually show your true potential and passion in a traditional context.
Emma, 2019 for you.
I would love to see a lot more usage of decentralized apps, because I think maybe because we're in this space, so we know a lot of actually real product out there. But if you go to this website, DApp Radar, the most active projects has maybe like I don't know 100 users per day, and my team actually signed up for like Golam, contributing his own personal laptop for storage for usage. But after 1 month, nobody has taken up on using the storage. So I was like, there's so much exciting solutions out there, and I would encourage everyone here to don't just listen, just go out, try out some of the solutions, right? Maybe they're not perfect, maybe they're not as user-friendly as the centralized applications, but those things are promising because we need more people to go in there, use them, provide feedback. So I'm definitely wanting to see more and more adoption of those. In Singapore, you have Tada, which is ride-sharing app powered by blockchain. Most people don't even know it, but they're using that. But I think most of the adoption will still come from financial service because money is close to everyone's daily life, and you would see more, I guess, people coming into using cryptocurrency as payment solutions, having crypto wallets, using that for remittances, overseas transfers. So just check out the solutions out there, and be part of the solution.
Thank you. Thank you for your panels today, and thank you all for being here.
Thank you very much.
Thank you. Could we get a round of applause for our brilliant panelists? Thanks, Andrew.